9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne with Annabelle Droulers.
We're counting down to the opening of markets in Greater China, and our top stories this morning. Asian stocks sliding as a rotation out of tech shares continues to gather pace on Wall Street. Fears of disruption from AI still rippling through markets.
We speak exclusively this hour with Taiwan Silicon Motion about their latest results and outlook when it comes to the memory chip business.
Also ahead, President Trump talks trade in Taiwan with China's Xi Jinping ahead of a planned face-to-face meeting later this year.
Plus, we're talking dim sum with the CEO of the dim sum chain, Tim Ho-wan, joining us to talk about expansion plans in Hong Kong and beyond.
And I'm April Hong at the Malaysia Economic Forum in Kuala Lumpur, where policymakers and experts are charting the nation's socio-economic agenda. Later in the show, we'll speak to the China-backed Asian Infrastructure Investment Bank about how it's seeking to bridge infrastructure gaps in Southeast Asia.
Yes, the BN headline says itself, right? This tech sell-off ensnares all stocks in AI's path. We thought at least parts of this, the region would be kind of spared from it, just given that, this focus on hardware and the like. But really, what we heard from Anthropic this week is really continuing to roar the software side of the story here and really kind of question, is it enough on some of these AI tools to eradicate an entire industry? Certainly that's going to be a key question, and why we're seeing this rotation so fierce once again.
Yeah, because it's not just the speed, it's also the breadth and also that sort of understanding that this time around we're not really concerned so much about AI bubbles or fears of circular deals. You're actually talking about entire business models that are potentially at risk of displacement. So yeah, we're focused on legal stocks this week or the legal changes because that's what the Claude co-work is doing, giving extra capabilities in that space. But it's not to say that tomorrow, next week, next month, it can't be another sector entirely. So it's certainly something that has a ways to play out. But in terms of how that's actually going into the market today as well, because I think to your point, a lot of investors we've spoken to this week have said that, Asia is more insulated. It's got more of the hardware plays. It's further up that AI value chain as well. But you're still seeing tech that's really leading the sell-off in the session today.
Yeah, I think Alphabet with that massive sort of CapEx number came out that did kind of spook the market in some ways as well. I think that continues. That's why you're seeing some pronounced selling with Korea and Taiwan coming online right now. And we are seeing the TAIEX decline quite a bit here too.
Yeah, we've actually just said we can show that now because we were down 1.2% at the start of trade. And to your point, I mean, that was sort of the thing. You've got this huge capex from Alphabet, totally blows past any estimates for this year. You would think that some of the beneficiaries of that would be the likes of Honhai, for instance, or SK Hynix. But anyway, we'll get to that in a moment, just to say that this is what we're seeing across the board here today. So you've got the Nikkei that's sort of just trending flat, but mostly stocks are very much in the red, really being led there by the Kospi off 2.3%. So let's also take a look, as I said, that Alphabet story, that capex plan as well. It should be something that gives benefit to these players in North Asia, in particular, Korea and also Taiwan. But again, broad-based selling so far in the session, and taking a look at what we can expect ahead of the China Open today, because big focus is going to be on Baidu. That's another really interesting tech story for us, because they've just approved a share buyback program, got that dividend planned as well for the first time ever. But lots of other things to track in China today.
Yep, in terms of your agenda, we mentioned about that Baidu buyback. Say that 10 times. HS Tech, we're still on bear market watch here today. We'll see how things play out here. But what you're seeing in Korea, what you're seeing in Taiwan, we'll see if that kind of filters through into the HS Tech session as well. But yes, that rotation that you're seeing, that is happening in the HSI as well. We take a look at what banks and property has been doing. Jinko Solar, that's an interesting one to watch here as well. Tianqi Lithium. So Jinko Solar denying a cooperation with Musk's team. There was, some reports that they had met in some ways. Tianqi Lithium also resuming trading here today. There was some sort of, disagreement when it comes to their placing. And so we'll see how that all plays out here today when it comes to some of the bond offerings and the like here. Sectors include critical minerals, energy, crypto, right? That continues to be doing its own thing.
Oh, crypto, it's so interesting. Really. I track it every day because...
Did I trigger you?
You kind of
Oh, crypto.
because you're back down around 70,000 now for Bitcoin, and it's just exceptional, really, how much the narrative has shifted in the past several weeks now, really. But just sort of the catalyst that crypto should have been responding to, like, for instance, dollar moves or commodity moves, AI moves, it's just not playing out.
And you talk about now it's the AI angst as well. And Bitcoin still continues to really go the other way, right? The AI angst has really helped wipe hundreds of billions of dollars off the value of tech stocks, not just in the software sector, but really across the board, as we've been talking about. Here to tell us more is our executive editor for Asian markets, Paul Dobbs, and he joins us from Singapore. Paul, I don't know where to start. The sell-off continues here in Asia. What is your team watching out for today?
Yeah, hi, good morning. Well, I think, there's good news and bad news about what we're seeing right now because, yes, those technology companies are under pressure. But if you look at what happened in the US market yesterday, we actually had more stocks rising than falling. And, of course, the equal weighted measure of the S&P hitting a new record high. So what it's telling you is, yes, there's a little bit more doubts about the technology sector, but there's actually quite a lot of underlying optimism about the strength of the US economy right now, which is why people are more confident in the small caps, in the industrials, in the value stocks and so on. So that's one thing I think to keep in mind. This is a little bit more concentrated in that. And so it's not entirely clear to me if people are turned off tech because they're worried about tech or because they're more excited about other things and opportunities out there. So that's one thing I think to keep in mind too. Yes, as you and Belle were discussing, I think more saliently, in particular, those companies whose business models are under threat because of what AI can do are having a bad time of it, a real tough time of it at the moment. And I think that the big thing here is, these are massively disruptive times, right? You've got the possibility that AI is going to be able to do all sorts of things that we didn't think were possible 2 or 3 years ago. You've also got, like at the start of this week, I was just astonished. I think that people didn't even shrug was the big tell, actually, that Elon Musk is talking about putting 1 million satellites into space to run data centers in the stars. Love it. But, kind of like this is the kind of thing that people can talk about, and it's no longer just science fiction. It's something that people are taking as a actual, genuine, okay, yeah, maybe not for a while, but this is the direction that we're going on. And so I think that, there's cause for optimism in parts of the tech space, and at the same time, caution over how much it's all going to cost and who's actually going to be able to pull it off.
So what does that mean then for the rotation trade in Asia? Because I think one of the interesting things is maybe there is sort of a crossover where you've got people that are not sure about sort of the business model for AI or that amount of spending, but also kind of looking to maybe be a little bit more insulated in these small caps as well. Is the extent of what you see in the US market also translating to this region?
I think it's a little bit dubious as well because, yes, okay, so software companies, don't get me wrong, right across the region had a bad day yesterday and are still looking under pressure, I guess, again today. But that's offset to a certain extent in big picture by the fact that the companies that are making the implements that build out the data centers, that power the AI, a lot of them are here. And so a lot of them will benefit kind of for being at the start of that cycle rather than the end of it. Today, I think it's more about that sort of momentum trading and using tech as an overall sector. So there's a little bit more indiscriminate selling going on, but maybe that doesn't take so long to flush out. And, as I said, I think that there's still other reasons for optimism about not just the US economy, but actually the global economy for that matter. So you may see some of the more tech-light gauges in our region outperforming today, just as we saw that happening in the US stock market as well.
Paul, thanks very much for joining us. That was our executive editor for Asia Markets, Paul Dobson, there in Singapore. And actually a company earning we haven't spoken about is Qualcomm as well, because we've got that quite tepid forecast for the current period, but concerns really about how that's also going to play out for consumer demand for the devices market too. So just a reminder, we do have a big interview with Qualcomm coming up. We've got the CEO, Cristiano Amon, on Bloomberg Television, or Bloomberg Tech rather in particular, but tune in for that conversation coming up I guess in several hours from now, really.
On the times on your screen.
Yes, that's what I needed to say. That's what I needed to say. It was so straightforward.
Let's get to our other top story here this morning. President Trump, and that unexpected phone call, I think, for all of us that when we saw that headline here with the Chinese President Xi Jinping will come to the White House, they've confirmed, towards the end of the year. Now, this after he had a long, thorough, and excellent phone call with Xi on the phone on Wednesday, and he spoke with NBC News' anchor Tom Limas earlier.
What did you talk about with the leader of China?
About a lot of topics. We talked
What's
about
the most
so much.
important topic? Is it chips? Is it the wars in Ukraine? What is going on?
I would say the economy, the relationship that we have with China. I'm going to be going there in April. Then he's coming here toward the end of the year.
Coming to the White House?
He's coming to the White House, toward the end of the year. We have a very good relationship. And, it's important that I have a good relationship, and for him that he has a good relationship with me. We have to have a good. These are the two most powerful countries in the world.
All right, let's bring in our China correspondent, Min Lo, on how did both sides portray this phone call?
Well, obviously, it seems to be a very fruitful one because President Trump ended up inviting Xi to visit before the end of the year. And obviously, it's a reciprocal move after he committed to visiting China in April. And the tone from President Trump was very positive. If you look at his Truth Social post, he talked about how everything was, quote, all very positive, and his relationship, his personal relationship with President Xi was extremely good. He talked about a range of issues, everything from Taiwan to Iran to Ukraine, but also trade issues like China's commitment to buy 20 million tons of soybeans this harvest and 25 million tons next harvest. Also, oil and gas purchases from China as well. But if you look at the Chinese readout, though, the tone is a lot more serious, right? It talked about how China always aligns its words with action, which is, I think I'm reading it as a hint that they expect the U.S. to do the same as well. And it explicitly stated one particular issue, Taiwan, as the most important issue in U.S.-China relations, and urging the U.S. to exercise utmost caution when it comes to arms sales, and warning that China will never allow Taiwan to be separated from it. And of course, this is a reaction to that arms deal, one of the largest ever, between U.S. and Taiwan last year, totaling about $11 billion, and that led to this huge military drills around Taiwan last year.
It was a very busy day of diplomacy for President Xi in particular, because not only did he have that call with Trump, he also spoke with President President Putin, rather, from Russia. So how did that conversation go? Yeah, that was a 1.5 hour long conversation. It was a video call, and according to TES, it was also, a video call where they talked about Venezuela, they talked about Cuba, they talked about Iran. And it's interesting, if you look at Chinese media coverage, People's Daily, the party mouthpiece, you would see that the coverage of the Xi-Putin call has much greater space on the front page than the Xi-Trump phone call. So you can see the Xi-Trump phone call is on the top right side, the one with the two pictures, that's the Xi-Putin call. So that shows you that the relationship with Putin is still extremely important to China. And no surprise, because it's coming at a time where the U.S. is weighing an attack on Iran, where Trump has threatened 25% tariffs on countries that trade with Iran, and China is a major trading partner. And analysts have been saying that Russia and China, they both view Iran as this linchpin in the Middle East that could counterbalance against the U.S. And of course, there's also that critical mineral summit happening in the U.S. as well. Another reason that pushed Russia and China together.
Yeah. And perhaps why they had that call first, before the one with Trump. All right, Min, thank you. Our China correspondent, Min Lo, there on, all these phone calls that happened there in the last few hours or so. Still ahead on the China Show, we talked to the CEO of dim sum restaurant chain Tim Ho Wan. You hungry yet? Yeah, we're going to get hungry soon as they open their 10th store in Hong Kong and doubling their footprint here at home.
Yeah, counting down as well to the open of trade in Shanghai, Shenzhen, Hong Kong. Futures are looking like we're going to open a little bit to the downside, but really tracking that overall sentiment we have in market trading today as well. More ahead. You're watching The China Show.
All right, when it comes to whether you like A or H shares, I mean, sometimes of late it really has been more favorable of A, right? You take a look at what's been going on with H's tech and really kind of has been falling with all these headlines around AI, the software story that seems to be roiled there. You have also concerns about VAT tax hikes in the tech sector and the like, which, you know, they're trying to at least dispel some of those rumors out there. But then again, H's tech has been seeing a pretty kind of miserable month, really, of late.
Yes, certainly. It's really been, I mean, we're a couple of points now away from a 20% drawdown, I think, for the benchmark. So something that we could even hit in the session today. And of course, as you say, it's not just sort of like the concerns around the local story, but really it's more of a global one as well. Yeah,
I mean, what we're seeing is this just, you know, rotation, rupture? Is it a fundamental break in how we look at the AI story? That certainly is one thing that we're questioning here as well. Here to join us is Shihao Li, A-share strategist at CITIC, CLSA. And Shihao, it's great to have you.
Thanks for having me.
We've been seeing this rotation out of you know, big growth stocks into small caps, not just globally, but also in China as well. How are you seeing this sort of rotation here right now? Does it have legs?
Well, actually, you know, for the spring rally in China market, especially for A-shares, it usually started with small caps. Because if you look at year 2024 and 2025, the spring rally may start sometime between late December or early January, and will end by March or April. So there's a kind of like a calendar effect pattern, something like that. And so for this year, we won't be surprised to see that small cap lead the market general benchmark. And especially, you know, for some large cap, there are some selling pressures from the ETFs. So make the CSI 300 just temporarily lagging behind those small cap index and stocks.
A lot of the reason we're seeing that rotation trade in the US is also because investors are optimistic about where the US economy is headed. I don't know if you can necessarily say the same for China's economy in some respects, just because there's still concerns about the consumer and the property sector as well. Do you see it being as broad-based, or are investors also more selective in those sectors as well?
Oh, yeah. You know, for the spring rally, I think they tend to be more selective. Because, you know, usually for the first quarter, there's a vacuum of policies, there's a vacuum of economic data, because usually we will combine the economic data in January and February together to remove the uncertainties from the Spring Festival, because, you know, the Chinese will take a very long vacation that will twist some of the economic data. And the date of the Spring Festival is uncertain, sometimes late January, sometimes early February.
No. A lot of these A-share companies, I mean, they're focused on the material side, energy. I mean, we saw that sort of crash on precious metals really hurt at least some sort of, you know, retail investor sentiment. How do you see that play out here in the equity space?
Yeah, I think we remain very constructive for the basic chemicals and non-ferrous metals, these upstream cyclical names. I think they will still be doing quite well for this quarter, even throughout the whole year, because, you know, the uprising trend of the prices of those commodities are real. So that's why the investors are trying to capture those areas that we believe we will see an uprising price rather than the deflationary pressure. Also, I mean, this is reasonable for them to do so, given they still have concerns about deflations.
So that's more of like the local economy and also the policy story that you reflected on there. But how much are A-shares also becoming increasingly, I guess, driven by other dynamics? And I'm talking more about global trends as well.
Yeah, so our estimation is that for China A-share, for those companies who have a listed 20% of their revenues coming from overseas market, they have now contributed 95% of the net profits in China A-share non-financial universe, and also 39% of the market cap. So basically, you can take that the China A-share, 1/3 of China A-share are less linked to the onshore economic dynamics.
Okay, Shihao, hold that thought. We'll have more from Shihao Li there, A-share strategist at CITIC CLSA. He's staying with us here as we count down to this open. You take a look at the pre-market just opening up. We're pretty flat when it comes to the Hang Seng. So relatively speaking, we're looking a little bit better for Hong Kong, but futures are still lower there by about 0.6%. 694 for $1 China, and obviously we'll watch what the fix tells us here today. 695 is a little on the weaker side of things. But yes, we recently just had an upgrade, or at least a different forecast from Bank of America here. They're saying, look, 6.7 for the currency here, really join the likes of Goldman Sachs and the like. Putting more ahead, this is Bloomberg.
You're watching The China Show, and here are some of the corporate stories that we're tracking this morning. French authorities have detained 4 people accused of spying for China, allegedly targeting Elon Musk's Starlink. A French cybercrime unit says 2 Chinese nationals allegedly tried to obtain satellite data from Starlink, as well as other critical entities, including the military sector. Prosecutors presented 4 people to a judge, asking that 2 be held in custody. Bloomberg has learned that SpaceX held meetings last month with banks from outside the US as it targets a listing this year. Sources say one group was made up of European banks and another included firms from other regions. We're told that Wall Street giants Bank of America, Goldman Sachs, JP Morgan and Morgan Stanley are already lined up to lead the listing. BYD sales in Germany surged more than tenfold in January. That's as the Chinese automaker continues to expand its biggest European market. It sold more than 2,600 new cars there last month, more than twice as many as Tesla in the same period. BYD first passed its US rival in Germany and the UK last year. Uber says it will expand its robotaxi services to include Hong Kong and other cities such as Madrid and Zurich. Hong Kong will be its first robotaxi market in Asia. The company plans to make driverless cars one of its key growth areas and aims to have them in more than 10 markets around the world by the end of this year.
All right, your pre-market opening up here right now, and we are lower by about 0.8%. So we are following some of the headwinds across global markets and what we're seeing here in the region on, AI concerns, software, certainly when it comes to this rotation, how fierce it has been. We can continue to see that for another day here. HS Tech, we're lower by about a third, 1.3%, I should say. 8 shares are also on offer. 694 for the currency here right now, but tech certainly is getting hit once again.
Yeah, that's right. And it's going to be really interesting to watch Baidu in the session today as well, because we did have that company announcing just in the last couple of hours or hour or so that they're actually authorizing up to $5 billion of share buybacks and also planning to issue their first dividend in 2026. So that is actually going to be perhaps bucking the trend in the session today, because you can see it's gaining 2.3% so far in the early trade, as you do see the Hang Seng Tech gauge passing that key level. The other stock to watch as well, or big tech in general, is again that continued selling pressure you're seeing, even though, as we say, we have heard from multiple analysts now that are saying that North Asia is relatively more insulated. Yes, you might see some initial selling pressure, but not likely to be as sustained as what we're seeing in other markets. Still, though, that's red across the board today. Tianqi Lithium, this has been a really interesting one to watch this week, because they actually had to reprice their convertible bond, and the previous one essentially didn't comply with the Hong Kong Stock Exchange rules, so that conversion price has been raised to 51.85 Hong Kong dollars. That's a 15.1% premium over the placement price of 45 Hong Kong dollars and 6 cents. But they've reissued this. Trading is also going to be resuming, as we see in the pre-market, already off more than 4% so far. But you are watching The China Show. We've got the market open coming up next. As we said, we are looking for some weakness here today in the session. But again, tracking what we're seeing in other markets as we continue to see these fears around AI spreading to lots of different corners. More ahead. This is The China Show. Welcome back. You're watching The China Show, counting down to the open of markets this morning. And the broader story really still relates around that AI theme and not concerns really about circular deals, but essentially this risk of displacement in entire industries or models that have been in place for a long time, like what we see in the software industry, for instance, at risk of being displaced. So I think in Asia today or Hong Kong, it's really going to be that Hang Seng Tech. And I have to say, some members of our Bloomberg intelligence team might be feeling a little bit vindicated in what they've been saying for the past few months, which is just the amount of optimism we've seen for tech in Hong Kong, and that Hang Seng Tech gauge is a little bit misplaced as well.
Shout out to Robert Lee, I guess, is that who you're talking about? But yeah, NVIDIA's Jensen Huang talked about this very thing, right? I think he was asked about it in a conference, and he says, this is the most illogical thing in the world, right? That his take is that better AI doesn't mean less need for specialized software. So, would Anthropic end up replacing industries, or would they rather sell this sort of technology to these companies as well. So this sort of, what would they call it? SaaS?
Software as a service model.
SaaSpocalypse. That was
Yes,
that was the word that
SaaSpocalypse.
came out from Jeffries. I couldn't even say it. SaaSpocalypse. Is it overdone? It's not quite overdone here today. If you take a look at what the headwinds are for this part of the world, we take a look at onshore markets, or CSI 300 is down about 0.6%. Similar measure here when it comes to Shanghai Composite. There, we're just hovering around that 4,000 psychological line here. We're still watching and tracking what goes on in commodities as well. So crude is still following what we're seeing in Brent and WTI on some of the Iran sort of risks out there. So Shanghai crude is up 1.5% or more, but copper continues to be seeing a bit of a top off there. Iron ore is also lower. We're watching some of these large caps like Quaychow, CATL, all seems to be in the red here. Cambricon Tech also continues to be the local chip maker story continues to be roiled as we start to see maybe more of these tech companies get those H200 orders from NVIDIA. So that continues to be one thing that's weighing on the chip makers across the mainland. Hong Kong is looking like this here right now. We're 0.5% lower on the Hang Seng here. HS Tech, if we continue at this pace, we may finally enter into a bear market technically. So certainly that's going to be one thing to watch here, but you are seeing some pronounced moves with Meituan. Alibaba is down some 2%. Tencent's also down by 1% or so. Baidu, as we say, bucking that trend after announcing that $5 billion buyback. And the first time they're giving out a dividend. So certainly that is the reason why the stock is up by close to 2% here right now. Hang Seng Property still doing quite well. So the banks and the property, some of the old traditional factors and sectors of this market still seems to be seeing a bit of value there right now. In terms of Tianqi Lithium, we're watching, of course, the A&H shares resuming trade here today. They had to reprice, as Belle mentioned earlier, that bond sale here after what happened with the exchange. So right now we are still seeing those shares coming back here down 8% for Tianqi Lithium in the 8-share market. Jinko Solar as well. So there was some reports that there was a meeting between Elon Musk and his team. Well, the company is denying that cooperation right now. Shares are down close to 9%.
All right, let's also take a look at something else that could put stocks a little bit under pressure today. This is Beijing, of course, intensifying efforts to collect corporate taxes. And this is a move that threatens to pressure earnings in what is, of course, already a very fragile economy as well. But let's get more of that Asia stocks reporter, Jeannie Yu, joining us this morning. So, Jeannie, it's an interesting one, the taxes not being paid and authorities wanting to essentially get that money. How widespread is this issue, and what are the kinds of companies as well that aren't paying essentially?
Yeah, exactly. We were a little bit surprised to realize that starting from August last year, our data shows actually more companies listed in Beijing and Shanghai that have been requested by the authorities to do some self-inspections and then pay some overdue taxes. And starting from last August, we've seen the number of companies actually is on a rising trend. And year to date, we realized that almost 20 companies that have been asked to repay the taxes. So that is already almost 1/4 of last year's total by number. So that rising trend actually I think it's in line with all the news headlines we've seen recently, especially China has been dealing with a record budget deficit since since a long time, and also in the meantime the government is trying to tax the hidden overseas investment by some individual investors. I think all of those adding up point to the fact that they really need ways to expand their funding sources when the property market is on a downturn trend. And when we talk to investors, they do mention that this is going to be a trend throughout at least this year, because there won't be a very effective way for the government to find to kind of fill the holes caused by the gap of falling property market.
How big of a deal is this then? Do you think this is really going to continue to be a new risk when it comes to the equity market at a time when it is losing a bit of momentum of late?
when we talk to people, and they did say like it wouldn't be like a broad, like one-off thing. The government just asks you to, to pay this tax and that tax. But for some selected areas, especially the companies that has very mature business, that has stable income, they're at risk of being, asked to pay more taxes. And for investors, that means like they need to raise their tax estimates for those companies in the coming years, and that would hurt their ROE and revenue profit growth projections, and it could pressure their their share prices in the near term.
All right, Jeannie. Thank you, Jeannie. You there, our Bloomberg Asia stocks reporter. Here with us still is Shihao Li, A-share strategist at CITIC CLSA. The issue about tax, there was a lot of speculation this week about, hiking VAT taxes in the tech sector and the like. How should I be looking at that here? Do you think it's in some ways going to be weighing on the earnings of some of these tech companies, or does it have any sort of value here still?
Well, actually, the root cause of this VAT thing, from my perspective, is that I think the government have realized that they have been there are so many loopholes in the tax system. So, and maybe some local governments, they've been quite loosening about these tax rebates, and that becomes the cause of the oversupply issue. So, if you look at the central government, starting from year 2025, they have been canceled the VAT tax rebate to exporters, so as to less encouraging some dumping behaviors. Yeah.
So you actually think it's a healthy move, essentially? Yeah,
it's a healthy move, because if you look at what they have announced is that they will also be strict with the high technology corporate certification, which means that because for enterprises who have that certificates, they can enjoy low tax, but some small enterprises, they may not even meet up their standards.
Tell us a little bit more of the national team. They've stepped in at times when they've had to buy. Recently they've had to cool down this market.
Yeah.
What role do you think the national team is going to play now?
Well, it's kind of like there are dual mandates for the Federal Reserve. There are also dual mandates for the national team, because for one side they have to be the stabilizer of the market sentiment, which means they have to buy when the market is low and they sell when the market is high. So that's one of the job. Another job is actually to be the long-term capital in the market. So I think there's two strategies for them. One is the more tactical, like the one we saw recently, and the other is more long-term, buy and hold. And according to our estimation, I think the outflows from those major ETFs has been around 60% of the original portion or original holdings. So that means probably they should stop here. Yeah, stop selling. Yeah.
So the national team's sort of taken out of the market, at least in the near term. What do you think then? Does that tell us that we actually can expect further gains from here? We would just talk, we showed that chart that, A shares are a bit more insulated, but you still have H. You've got the Hang Seng Tech, for instance, looking at a 20% drawdown today.
Yeah. Well, actually, the national team, they don't have any holdings in Hong Kong shares. So basically, Hong Kong shares is actually being insulated from the national team behavior. Well, the sentiment about China, the Hong Kong market is, usually if you look at the spring rally pattern, it's always the China A share outperform H at this moment. And also, given there's some, hit on the AI thing, targeting the software side, I guess some of the technology sectors in the Hong Kong market also kind of bear the brunt. Yeah.
In terms of where you're seeing value, it seems like value is taking over growth these days. We've seen it in property, we've seen it in financials. Is there value there, you think, in these trades, or is it more just tactical at this point?
I prefer to be more tactical in this issue because, it's naturally it would be the investors will seek safety haven at this moment because they feel maybe the technology has been leading the market for too much longer time. So probably at this moment, they might trying to find some sectors that are at the lower valuation. Yeah.
Earnings-wise, what are we expecting?
I would say that we should expect more policy to support the real recovery in the fundamentals, especially for these traditional sectors. Yeah.
Shihao, thanks very much for joining us this morning. That was Shihao Li, their A-share strategist at CITIC CLSA. And coming up, we have the big interview we've been talking about this morning. This is, of course, the head of the Hong Kong dim sum chain, Tim Ho Wan. But we're going to get a taste of consumer appetite. That's as they open their 10th store in Hong Kong. More ahead. This is Bloomberg.
We're really happy that foot traffic has picked up. We're not as happy at the retail sales. They haven't picked up at the same pace that traffic has. It's usually lagging, a lagging indicator, but we're going to have to work harder to transmit those foot traffic into sales. And right now, the appeal of Shenzhen is still strong. Hong Kong people, even though it sounds like they're going up a little bit less, it's still difficult to compete on price.
Adriel Chan there, the chair of Hang Lung Properties, of course, one of Hong Kong's largest developers, spoke to him just this week about the outlook when it comes to F&B, when it comes to Hong Kong's retail sector. Although, he did say there are signs that possibly things are bombing out. At least that's what investors have been pricing in right now. Let's get a bit more about the F&B sort of scene here. Tim Ho Wan, you may have known them, right? The Jollibee Group's flagship Chinese cuisine brand has opened a new store in Hong Kong, expanding its presence in the city to 10 locations. Now, that's twice or double the number it had just a year earlier. Now, the dim sum chain gained fame in 2010 as the world's most affordable Michelin-star restaurant. Joining us now is Sheng, CEO of Tim Ho Wan there. What an interesting week, and certainly has been a great news for Hong Kong. This doubles your footprint in the city, essentially, now.
Yes.
Why double down?
So it has actually been an exciting journey, an exciting time for us at Tim Ho Wan to be able to actually double the journey within the past 1 year itself. And I think as we actually look at it, since being part of the Jollibee Group, Tim Ho Wan has actually flourished further, because what Tim Ho Wan was actually known for is authentic Hong Kong dim sum of high quality and of great value. But since being part of the group in the past 1 year, we've actually been able to actually strengthen our operating process, our systems, and this now allows us to actually create and build a sustainable and replicable model, because one of the things that is very important for us at Tim Ho Wan is to ensure the consistency of the food that we actually offer across our restaurants around the world.
What is the roadmap then? If you've doubled just in the space of a few months in Hong Kong, we're talking about, do you have a target of how many restaurants you're looking at here, say, by the end of this year?
I think for us, how we actually look at business is really to actually look at the number of consumers or guests that we're actually reaching around the world. While there might actually be a number in terms of number of stores, what we first focus on is actually sustainable growth and making sure that our fundamentals are actually in place. So beyond just the normal store expansions itself, we're actually looking at expansion in different areas. For instance, in the market of Hong Kong itself, delivery is actually a fast-growing trend. So that becomes a new channel that we could actually tap onto. And being in the dim sum space that is predominantly strong in the lunch day part, we're now looking at how do we actually create more customers coming into our stores across the other different day parts as well. So beyond just physical store expansion in our case would actually even include new channels and different day parts as well.
And I remember the first time Tim Ho Wan opened back in 2009. You had a little hole in the wall, 20-seater in Mongkok. You switched that quickly to Sham Shui Po. But to see that expand to now, we've ridden through the ups and downs of Hong Kong's F&B scene. There seems to be now recently signs of optimism coming back, that perhaps things have bottomed out a little bit. We just heard from Adriel Chan from Hang Lung saying, look, we're seeing it in foot traffic, but retail sales not quite. Still needs to catch up. What are you seeing in terms of foot traffic right now?
So to start off with, we have surely came a long way from the 20-seater restaurant to actually having presence in 11 markets globally right now. And it is true, we're actually seeing we are seeing a bit of a paradox in the market right now, whereby we're actually seeing that there's a bit of a decline in certain areas, but there are growing opportunities in other areas within the food and beverage scene. So if I were to actually look at some reports by the Hong Kong Census and Statistics Department, the food industry in 2025 was flat in the year before. This is already a bit of a progress coming off a decline in the previous year. And if we were to actually look at quarter by quarter, we're actually seeing signs of encouraging traffic growth. But having said that, from a consumer perspective, it's not everywhere that consumers are actually going too.
Where are they going then? That's interesting.
They're going to Shenzhen, or are they?
Well, they're going to Shenzhen, we know. But if you're saying that there are some sectors or areas in Hong Kong that are performing better than others, or different types of consumer behaviour, how are you sort of categorising it?
I think it's actually interesting what we're actually seeing right now, that there's a divergence. You have one end where consumers are actually seeking value, that I need the best bang for the buck, and that those are the places that I would actually be going for. But similarly, the same group of consumers would actually be willing to actually indulge and spend over the weekends. So we're actually seeing on a day-to-day basis, consumers are actually looking for great value, but every now and then on special occasions, they're actually willing to actually spend a bit more. And for Tim Ho Wan, this is a unique space that we actually occupy because we pride ourselves in serving high-quality, authentic Hong Kong dim sum at affordable pricing altogether. So this is not only in Hong Kong, this is something that we're actually seeing across global markets, in all the markets that we operate in as well.
It's the young consumers, right? They're much more budget conscious. They maybe opt out for fine dining for something that is more affordable, as you say. This northbound travel trend, though, is there any way to offset that?
I think some of the trends are actually there to stay, and this is actually a good reminder for us in the Hong Kong F&B or hospitality scene to really look at what are the gaps, what are the areas we could actually further focus on. If I were to actually look back at Tim Ho Wan, for instance, when we started, the priority, the focus was really on the kitchen and the quality of the food. That still remains our core guiding principle today. But having said that, good quality food itself is not enough today. Where we're actually seeing in the northbound consumption is really the quality of service. And this is where we've actually really upped our service, ensured that we're actually creating an overall improved guest experience. So I think it's a combination of this kind of things. The trends are here to stay, but what we can actually do in the Hong Kong market is really to see how we can catch up and to actually create an overall satisfying guest experience for people walking through our doors.
How do you plan that expansion? Because you have different sort of models. You've got the company operated, you've got the joint venture, and you've also got the franchise or the franchisee model as well. How do you determine which model to take as you look at new markets and new opportunities?
I think the way we actually look at it is as we actually assess opportunities market by market. We really look at the opportunities and where we could actually leverage on the strengths of partners or franchisees in market. And where as a group, as a company, we do believe that we have the right to win by going direct via company-operated stores. So for instance, in Hong Kong, China, Singapore, and most recently in the United States, those are company-operated stores. But as we actually assess opportunities geographically, there are some areas whereby we do see synergies by working with a local franchisee who would know the market better. So I think it's a combination of the best of both worlds.
Yeah, I mean, you have markets, right? 11 markets, as you say, Philippines, China, Australia, Japan, US. What markets still excite you? Where do you think you can still tap into? And are there other geographies that you're looking at now to expand to?
I think for us right now, Hong Kong, being the home market, remains a priority. But we're actually looking at the United States as a key priority market, because if we were to actually look at trends in the market itself, we're actually seeing a growing need where consumers are actually looking for authentic Hong Kong dim sum. So this is one of the markets that we're actually looking at expanding across, and we've actually set a goal to open up another 20 stores by 2028 in US itself.
Okay. Well, other concerns in terms of trends is, of course, the rise in these GLP drugs. And we've seen it from many sort of restaurant chains and the like, that's saying, people are consuming fewer calories, they're choosing protein over carbs now, and they really had to force themselves to kind of rethink the value, the menus, or even change the marketing. I mean, have you had to do anything?
So one of the things that we've actually done on our end is like dim sum, authentic Hong Kong taste remains the core, but we're actually really trying to understand and listen to our customers. We've actually put in place a program which we call Voice of Customers, whereby we are really trying to understand from our customers and guests what they're actually looking for. So recently we've actually launched a couple of new menu items to complement the cores that we have that taps into this kind of trends. One favorite example that I could actually quote is avocado dumplings. So that plays into the healthy trends as well, right? dumplings. So fried dumplings is something which is synonymous with dim sum, but when we actually put it together with avocado paste,
it's not very authentic,
that is
Sheng.
something which is unique. The dim sum and the dumpling remains authentic though.
Sorry, I'm a local Hong Konger, so I get very fired up about this stuff.
I am curious though, because you've got these new avocado dumplings, but how does that stack up against sort of the traditional pork bun? If you had to say 3 top selling dishes globally, what are they?
So for sure, our pork buns, our char siu bao would actually still be the best selling, not only in Hong Kong, but around the world. That is what customers and consumers come to our stores for. But over and above, it's no surprise for Hong Kong dim sum chain like ourselves. Our top 3 items would actually be the char siu bao, the ha gao, and the siu mai. Those would actually be our top selling items, regardless of which market we operate in.
Keep it traditional. That's always my thing. What's your favorite, Sheng?
So, of course, it's a barbecue pork bun.
I think it's mine, yeah.
It's a must-have every single time I'm actually in store.
Yeah, that crunchy top.
All right, now you've got 10 stores in Hong Kong to choose from.
You got me hungry, Sheng.
Okay, thanks very much for joining us. That was Sheng
Thank
Li,
you for having us.
CEO of Tim Ho Wan, and you can explore live streaming news actually and interviews. This is launching today. This is our Bloomberg TV shows, documentaries, reporter analysis, and more. So it's all in one place. This is the new video hub that's just launched. You can actually drill down, look at what the China show is doing in particular, but do check it out at bloomberg.com/videos. More ahead. This is Bloomberg.
All right, we're checking markets here right now. Hang Seng is low by more than 1% here. Onshore markets looking a little bit better, but we're still seeing a downturn about 0.6%. What you're seeing here is really a continuation of this retreat when it comes to the AI story, tech story, and the like in this rotation into more of the value sort of side of things here. So we'll continue to watch that and give you more of an update coming up. And Shanghai crude continues to be higher here. Vol slightly higher as well here in Hong Kong. Well, a lot more on the way in the next hour. You're watching The China Show. Welcome back to the China Show. A look into the HSI just a half hour into the session here, and we are down by about 1%. HS Tech is what's dragging most of it, and really we continue to watch really what goes on when it comes to this whole rotation story, right? Out of AI plays here, out of software, and really kind of into more the value parts of the market. So that continues for another day here today, Belle.
Yeah, that's right, and really interesting when you drill down into the sectors that are sort of improving or doing better. It's definitely that consumer discretionary, as you say, and consumer staples, I guess. But Yum China is very much standing out. Look at that gain there, 7.5% for that stock. So we've had earnings coming out with those beat in the fourth quarter. So of course, something that the market likes, chopping Wall Street estimates, essentially, or the street estimates. But also we had an upgrade from Jefferies on the price target, and they're actually looking at new stores that are expected to be opened. So positive sales, transaction growth as well, and that year-on-year margin should stay stable. So it is that sort of broader rotation we're seeing. Laopu Gold again. It could be the gold story continuing to have an impact here. But let's take a look at what's happening in the tech space, because this is certainly moving in the other direction and what is dragging down the overall Hang Seng today. Because we came into the session, there were lots of fears still around this the Anthropic story of this week, how that's hitting software stocks across the board. What does that mean for entire sectors that could be disrupted? And Asia is very much not immune to this sort of sentiment, at least for now. Maybe it's not going to be as deep, the selling pressure, but it's still having a big bearing. When you take a look at which sectors or benchmarks as well, I mean, it's certainly the Kosdaq that's standing out for the wrong reasons in the session today. If you take a look at that so far, Kosdaq is leading the losses here, as is the Kospi, down 2.5%. But Taiwan also more than 1% to the downside, even though when you have companies like Alphabet, for instance, that are looking at huge capex plans for 2026, a lot more than what Wall Street was expecting. That should be benefiting names like Samsung, Hon Hai, SK Hynix, but again, not translating. If you take a look at those chip stocks, not translating in the session so far today, because you can see, particularly in Korea, some big losses here, Yvonne.
Yeah, I think SK Hynix and Hon Hai are one of the bigger suppliers of Alphabet. And yes, as you mentioned, right, they should be bucking the trend and actually be benefiting from that massive capex spend from Alphabet, but it's not, because it seems like this tech sell-off has really wiped out anything in AI's path here right now. That, right now the knee-jerk reaction is, I'm going to sell now. So certainly that's one thing to watch here, and whether we see this sort of rotation further, right? Because in the U.S., what you saw in terms of the breadth of this rotation is that, this is also could be a positive signal, right? That things are actually broadening out in this rally to some of the small caps, to other parts of this market. Is that the same case for Hong Kong? That certainly is the key question, because you take a look at how the Asia, at least MXCP, is looking at here right now. That rotation continues on, right? That massive sort of red, most of this is IT, right? Information tech, that's down some 2% on the regional benchmark here today. Financials are usually how it's been outperforming, but that's also in the red here today. But what really is emerging in terms of value? Maybe it's the consumption side of things. So the consumer staples, consumer discretionary, healthcare. Those are really what is catching maybe a tactical sort of buy here right now in the face of this rotation. Interesting enough, materials, right? This has been something that has really been a massive rally at the start of the year, given what we've been seeing when it comes to commodities, precious metals, and the like. Has that rout that we saw last week really kind of continue to weigh on this sector? That certainly is going to be the key question here moving forward, Belle.
Yeah, I think it's a really interesting one, because part of that rotation in the US is also an expression of conviction in the outlook for the US economy. And I wonder whether the concerns that still persist around China, in particular around property, consumer, whether that actually justifies, this rotation to the same extent. But let's get more with our managing editor for Asia Equities, Lian Ting Tu, joining us from Singapore. So is it like for like what we're seeing in terms of the rotation trade in Asia? And is it the same dynamics that's driving it in the US that you see in these markets as well?
Hi, I would certainly say in China that rotation trade actually has been going on for quite a lot longer. In China, if you look at MSCI China value versus China growth, the outperformance has been 6 months in a row. I would say it's much longer than what we're seeing in the US or globally. Part of the reason is probably a bit of an earlier awareness of the tech stretched valuation, and also the low valuation in the consumer sector. Part of it is also sort of a safe haven type of trade mentality, because people are going into the likes of banks, of energy, and these are the companies that are actually paying dividend rather than those tech software names. So I would say in China, it's not really the kind of optimism towards economy. It's more about, which companies can give me a bit more dividend.
And what are, the analysts and the like that you're talking to saying, right? This rotation, is it something that's more just technical, just given how overbought some of these sectors were, or do you think that there's some sort of fundamental break here?
I feel like in the US, it seems the rotation may have a little bit more legs, just because the tech rally has been going on for 3 years since ChatGPT came into being 3 years ago. So the Max 7 has really powered the S&P 500 rally over the last few years. I can see the kind of unwinding can take a little bit longer, and the money going into the non-Max 7 companies can also take a little bit longer. But for Asia, the AI trade narrative is quite different. I would say the hardware names are mostly sitting in Asia, right? The likes of Korea and Taiwan, all these chip makers, component makers, or even in China, the power transformers. Who would have thought they were the winners in the effort to build out global data centers? So I would say for Asia, the kind of rotation into these value names may be a little bit more short-lived, just because there's still a lot of momentum towards buying these memory chip makers. And if you look at these recent earnings, including Qualcomm earnings,
earnings, they flagged that memory chip shortage is really the reason why they couldn't, make more chips for all these handset makers. And the handset makers, especially in China, couldn't get enough chips. And if you look at Nintendo, yesterday they flagged the same thing about memory chip shortage. So that would all translate to bullish sentiment for these Korean chip makers, which indeed are taking a little bit of pause right now in their rally.
Leanne Ting, thanks so much for joining us. That was our Bloomberg Managing Editor for Asia Equities, Leanne Ting too. And just in the last few moments, we've actually had an alert crossing the terminal. This relates to Indigo, which is Asia's largest low-cost carrier. We know that in December of last year, they had a severe system failure that really laid bare the limits of what has been a very rapid expansion for the airline. So thousands of flights that were cancelled over just a few days, and the chaos essentially prompting an intervention by India's aviation regulators. So just in the last few moments, we've actually had India's antitrust watchdog ordering a probe into the airline. This is going to be over alleged fare surges and cancellations of those flights again, just a couple of months back.
All right. We'll see how the stock reacts to that once things open up in India here. Turning now to one of our top stories, President Trump says Xi Jinping will come to the White House towards the end of the year, and that's after they spoke by phone in what Trump calls a long, thorough, and excellent discussion. He spoke with NBC News anchor Tom Lamas.
What did you talk about with the leader of China?
About a lot of topics. We talked
What's
about
the most important topic? Is it chips? Is it the wars in Ukraine? What is going on?
I would say the economy, the relationship that we have with China. I'm going to be going there in April. Then he's coming here toward the end of the year.
Coming to the White House?
He's coming to the White House, toward the end of the year. We have a very good relationship. And, it's important that I have a good relationship, and for him that he has a good relationship with me. We have to have these are the two most powerful countries in the world.
Let's bring in Min Lo now, our China correspondent, on. We've gotten the readouts from both sides here. Overall, how do they differ? What's the same? How are they aligned?
Yeah, I would say just judging from that interview alone, it sounds like President Trump has confirmed that Xi is going to come. Xi is going to come to visit the White House before the end of the year, which to me sounds like a stabilization of relations. Right, this is the standard playbook for a functional relationship. He goes to visit China, and then he returns the favor, and President Xi comes to visit. So in terms of the readout from both sides, Trump posted on Truth Social a very positive tone there. He says that his personal relationship with President Xi is, quote, extremely good. He talked about a range of issues, everything from geopolitics, Taiwan, Iran, Ukraine, to trade, right? Just now in the interview, he mentioned the economy is the number one issue for the U.S. And those agricultural pledges from China came through. 20 million tons of soybean purchases this harvest and 25 million for the next harvest. And they discussed oil and gas purchase as well. But when it comes to China, the readout didn't mention any of these issues except Taiwan. That was specifically mentioned as the number one, the most important issue in U.S.-China relations, and saying that China will never allow Taiwan to be separated from China, and warning the U.S. that they need to exercise a lot of caution, especially when it comes to arms sales to Taiwan.
Yeah, no, I guess that's the real red line for Beijing. What else happened for President Xi? Because, of course, he had another call, but this one was with President Putin instead.
Yeah, just hours ago, he had a 1.5 hour long video call. I mean, I don't even have that long a call with my best friends, but yeah, clearly very close friends, just talking for an hour and a half video call. And again, if you look at the readouts, a very short one, but it really shows you that the two sides are presenting this very united front, right? At a time when there's a lot of uncertainty, a lot of turbulence in global markets. There is, the Iran crisis going on. And of course, Russia and China are both aligned in seeing Iran as this linchpin in the Middle East to counterbalance against the U.S. So no surprise that they also had a very long call just ahead of that call with President Trump to align their stance on how to deal with the U.S. And China also committing to continue to open up its economy to Russia as well.
And this is all happening as Trump is also hosting these 55 countries at this critical mineral summit as well. What came out of that one?
Yeah, so this is a really large-scale pitch from the U.S. to create a large trading bloc with the rest of the world aside from China, for critical minerals trade to basically counter China and to protect non-Chinese companies from Chinese producers undercutting global prices. So the U.S. has been pushing for a price floor mechanism that countries like Japan, Mexico, and even the EU have agreed to, and they're working towards a binding multilateral agreement here. So it's interesting. The U.S. has gotten a lot of agreements out of this. They signed 11 bilateral agreements, and possibly more to come, because I think the EU and the US have agreed to commit to conclude an MOU within 30 days. And so, of course, this is something that would threaten China's dominance in the rare earth sector. They currently control about 90% of the global refining capacity. So it'll be interesting to see how the Chinese Foreign Ministry or Commerce Ministry respond to this, or whether they will have any specific retaliatory moves.
Min Min, great reporting. That was our China correspondent there, Min Min Lo. And up next, we're going to be hearing exclusively from Silicon Motion and its CFO, Jason Tsai. That says the key chip enabler forecasts first quarter revenue above estimates despite rising fears and concerns really around the dynamics that we're seeing in the memory chip market. But we'll have more on that ahead. This is Bloomberg. Well, the Nasdaq-listed chip designer Silicon Motion saw its shares jump. That's after first quarter revenue forecast came in much stronger than expected. So the stock had already surged more than 71% last year. That's as it rode the tech boom. But joining us exclusively now is the company's CFO, Jason Tsai, from Taipei this morning. So, yeah, strong set of results, and you're saying that this is really just the beginning of where you go for 2026. So talk us through the numbers and what were the key takeaways from you?
Sure. At the start of 25, we had anticipated exiting the year at $1 billion run rate. We ended up with $278.5 million in the fourth quarter, which, surpassed our initial target. We saw strength across the board. We've been gaining a lot of share in mobile with eMMC and UFS. We've been gaining a lot of share in PCs. And so as that share has manifested into, much stronger results and a much stronger backlog going into 2026. For the first quarter, we're expecting to grow 5 to 10%, where normal seasonality for us is typically closer to down 10%. So this is a huge start to the year for us. And we believe we're only going to get stronger throughout the year as additional projects ramp, as we scale into AI infrastructure, DPU products, as we scale into enterprise SSDs designed for data centers and AI applications. So we're really excited about this year, but we think this is the first of many strong years to come.
How are you looking at the first half? Because, if you look at the industry trends, obviously there's been a slowdown in terms of PCs, smartphone growth. There is also, we're in this kind of midst of a super cycle when it comes to memory chip prices. To what extent do you think that's really going to start hurting demand for the rest of the first half of this year?
Yeah, I think, you're certainly hearing from different PC OEMs, smartphone OEMs, and even third-party research folks talking about this year being certainly a lot more challenging from a unit volume perspective. As cost of components, cost of memory continue to surge, that is going to have some demand destruction. We anticipate some of that already in our model, but the backlog that we have based upon the strong share gains, the new product introductions, next generation products that carry with it much higher ASPs, all of those things are going to help us be counter to kind of the macro issues surrounding end market unit volumes, et cetera. So we're seeing a lot more outsourcing by the flash makers. We're seeing a lot more opportunities to gain share. And so that's what we've been laser focused on over the last few years, is winning more of those sockets, getting our engineering teams up and running in order to support these additional platforms and customers. And we're now really starting to see kind of reap the rewards of those investments here beginning in early 26, but this will be a multi-year cycle for us.
Yeah, because of course in the earnings you highlighted several times the strong relationships that you have with flash makers, OEMs, device makers as well. So you've been able to secure NAND supply. But talk us through how much NAND you've been stockpiling, for instance, and how long you think you're as well insulated in this market.
So we were buying NAND since early last year in anticipation of the tightness that was going to be coming. We're still procuring NAND. I think some of the new projects that we have with the leading AI GPU company, infrastructure company out there, we're building boot drives for them, and that's going to require some much higher densities. We're going from 128 and 256 gig to upwards of a terabyte over the course of this year and then into 2027. So we are certainly looking to procure more NAND. We have secured, we're working with 2 NAND makers. We've secured one source. We're working closely with the other NAND maker to make sure that we've got continuous source. But given our strong relationship of more than 20 years of working with NAND makers, we are in well positioned with them in order to make sure that we can secure that supply longer term. So we're confident that we can do it. We're confident that we can supply our customers that are depending on us for these boot drives, for these data processing units that are essential to next generation GPU, CPU platforms. And so we're really excited by, our entrance into this AI infrastructure market, and then, expanding that into enterprise storage for those applications here in the near future.
We'll get to the exposure to that AI data center in just a moment, but first on the consumer side to the business. If you are getting, for instance, Qualcomm that's highlighting that they're going to see weakness in the devices market and concerns really about a slowdown in smartphones, for instance, but other consumer electronics products this year, does that hurt you more on the demand side?
I think certainly, as with all things, right? If the unit volumes are growing nicely, that's going to be a benefit to everybody. But I think, what sets us apart is even in challenging times like today, where you have the higher memory prices, where you are seeing some demand destruction, being able to grow beyond kind of the macro is what we've been really planning for. We wanted to make sure that we could take our own destiny into our own hands. So by winning more share, gaining more share, winning more projects with flash makers as they were looking to outsource more, and leveraging that 20 plus year relationship with every flash maker out there has given us a tremendous amount of opportunity here to scale and grow in spite of these macro challenges that you're seeing from a unit volume perspective because of the higher prices. Certainly you're going to see the PC market decline this year. Certainly you're going to see smartphone markets decline this year because the component costs are getting much higher. But even in spite of that, then that's all been built into our models that we look at internally. In spite of that, we believe we can still grow very strongly this year. Q1, again, counter seasonal for our business right now that we're seeing. Backlog would indicate that this strength will continue throughout the rest of this year. This is not a pull ahead. This is not anything like that. This is true demand that we're seeing from our customers as we gain share. So we're really excited that even in difficult times that we're going to be able to outshine other peers in this industry.
Yeah, you mentioned about how you guys have certainly been showcasing some of the AI storage solutions that you can provide. I mean, talk to me about this whole PCIe 5, the transition process, and when do you think you're going to start to see that in the earnings?
Yeah, so PCIe 5 is a big product for both client SSDs as well as for the enterprise. And so for those products, for client SSDs, we're starting to see that ramp up. For the enterprise products, we are in sampling with customers already for those products. We expect that to, on the enterprise side, our MonTitan enterprise SSDs, we expect that to begin scaling here in the back half of this year, and then scaling more meaningfully going into 27. We anticipate these MonTitan enterprise SSD controllers to account for 5 to 10% of our business by the time we exit this year as we go into 2027. So it's a huge greenfield opportunity for us. And we've lined up 6 customers, 2 tier 1 customers. We're well exposed to CSPs and large enterprises in both the US as well as in China and Asia. And so we're excited by the opportunity. Was the pricing of storage, both hard drives and NAND, get more and more expensive. The need for high capacity, lower cost storage, it becomes greater and greater. So the demand that we're seeing, the inbound interest that we're receiving, continues to get better and better each day.
Jason, I know you're not part of the software side of things. I want to get your take on the sell-off that we're seeing across software shares. Given this Anthropic AI tool, there is this whole kind of concern that this is going to disrupt, if not eradicate, industries in SaaS and the like. How do you view this? Do you think that some of these concerns are overdone?
Look, I think this is the next industrial revolution, right? And what we're seeing in AI, what's going on right now, I think as with all industrial revolution type events, you're going to see a change in the way people do things, right? And so I don't necessarily think that industries will die. I think people will pivot and find new ways of developing their skills in order to accommodate for the new tools that are being presented in front of them. How do we use the tools better, right? It's not about no longer needing those people, but it's using those people to use those new tools more efficiently to improve outcomes, improve lives. And so I think, certainly there's always going to be a bit of consternation early on in a cycle, but I think ultimately what we'll see is improving opportunities for everyone with AI, with the ramp of these new capabilities and tools.
Jason, great to have Jason Tsai there, CFO at Silicon Motion. Another big interview coming up your way on Bloomberg Television. We're going to speak with the Qualcomm CEO, Cristiano Amon, on Bloomberg Tech. Make sure to check out that one. This is Bloomberg.
All right, taking a look at how markets are trading at the midpoint of the morning session this morning, but we are seeing the dollar trading fairly steady so far. It had been advancing earlier against most of its G10 peers. What else we're tracking is the Kospi. It's certainly leading the tech sell-off in the session today, down 3% at this point. And Hang Seng Tech, if we stay at these levels, we will end the day in correction, down 20%. But more ahead, silver under pressure. This is Bloomberg.
Well, 11:29, I should say, a.m. in Tokyo. Japanese markets are heading to that lunch break here right now. Yeah, we got that 30-year bond sale happening later on in the next few hours or so. When you take a look at what the appetite was going to be, that's going to be up for a big question there. Just given that we have seen this volatility in the long end of the curve, given some of these concerns around Takaichi, this plan to cut food sales taxes, and then of course we have the snap election that's happening on Sunday as well. So we'll see how that all plays out. But you take a look at how JGBs are doing. The 30-year yield is one to watch. I mean, we're still hovering around those record highs right now.
Yeah, but overall, it's a risk-off session. If you take a look at how we're faring, broader markets in Asia today, it's really tech that's bearing the brunt of it, and certainly accelerating, because you think about the Kospi, for instance, you're 3% in the red so far. The IT index, you can see the absolute laggard in the session, off 2.3% so far too. So really, again, following what we had in the Wall Street session overnight, fears about the disruptive nature, essentially, of AI technologies that are hitting lots of different corners. Bonds, private credit, equities, of course, are the first and foremost.
Yeah, it seems like everything is kind of falling in AI's path, right? Even silver is continuing to see and extending those losses there. We're down some 5%. So you're seeing it across most of sectors, as Belle mentioned here. I think the only kind of solace is that U.S. futures are actually in the positive territory here. The dollar is also still bid up. So we'll see. As you mentioned, right, the broadening out of the U.S. rally is not just about rotation, but it's a sense that, this is an economy that's still growing above trend, right? So maybe there is still some positivity here in across risk assets, the like. Yeah.
All right, let's talk about Australia's largest pension fund. That's AustralianSuper as well, because it's hunting for private equity deals in Asia to grow its portfolio. Speaking exclusively to Bloomberg, its chief executive, Paul Schroeder, also discussed their tech allocation amid a sell-off in the sector.
We're heavily exposed to tech, and we're invested heavily there. Of course, it's going to be a really important part of the future, but nobody quite knows what its form's going to be. I like to remind people that railways started in 1825 and the iPhone arrived in 2007, and ChatGPT went to the public in November 2022. So we're still early days, just starting to mature. We're seeing a bit of extra capex at the moment. We're watching valuations. We're thinking about future earnings. But, you know, is AI the big story? Of course. Is it going to be disruptive to software? Almost certainly. Is it going to be disruptive in other ways? Of course. But nobody quite knows just how.
Yeah, so how do you separate these AI-driven gains from the real thing or just hype? Do you have any concerns that when you look at this AI trade, does any of it look like a bubble, like shades of the dot-com bubble?
Oh, well, I think the fundamental thing to know about AustralianSuper is that we're an active investor. And, you know, the world is swimming in passive cash and passive capital. And our people spend a great deal of time looking for value and where we're going to generate free cash flow in the future. So, you know, we're not just following the index here. We're very thoroughly, carefully thinking about who are the likely winners, who are the likely ones to create long-term value, but most importantly, who's got the capex right, who's going to have the earnings right, and who's going to have a sustainable business model in the future in the context of a globally diversified portfolio. And of course, that's so important to investors and to the members of the fund, that they've got exposure in various markets, various sectors, and across all asset classes.
Okay, so in terms of being active and globally diversified, are you redeploying money to Asia from the US or elsewhere?
We're very strong on the US. You know, it's been the source of the greatest earnings and wealth over the years. I'll just give you one example. If you had $100 and you invested in European markets in 1920, it's worth $19,200 today. If you had the same $100 and invested in the US markets in 1920, it's worth $104,600 today, 5 times. So so many of the great companies are in the US. So much of the deep earnings is in the US. So we're strong in the US, but we're coming from behind. About 35% of the portfolio is exposed to the US. So we're strong in the US. We're investing in the US. We've got a great office there in New York to help us invest well for members. But it's also true that we are diversifying and thinking about Asia, especially through the PE lens, because Asia is going to represent 42% of GDP in not too long.
Now, you did mention PE there. That is attracting some significant interest at the moment. Can you tell us a little bit more about your strategy for private equity investing?
Private equity represents to us, obviously, the greatest opportunity for reward, but also risk. And it's also an expensive way to invest. So we're thinking very deeply about PE. Our global head of PE is based in New York. Our future is one of more PE, probably about 4% of the portfolio is PE at the moment. We'll probably get to 10. The fund's going to triple over that time, so you can see the size of the exposure growing. And where we are at the moment is just at the beginning of a plan to expand our PE exposures in Asia and across Asia, and as I say, across various countries. So PE is going to be very important to us. It's a very important part of building AustralianSuper members' retirement balances. I imagine we could double our exposure in a fund that's tripling. It's a co-underwrite, co-invest, deep partners, high-quality GP strategy that we're implementing. And it's one that we're now thinking about expanding into Asia.
So if you're going to expand this into Asia, which particular markets would you be looking at? And how do you navigate around some of the transparency risks when it comes to private markets?
It's very important that we do this prudently and thoughtfully. We've had some really good experience. We've got an office in Beijing, which helps us a great deal. We've had some really great experience in India. We're energised about where Japan is at the moment and the opportunities that exist there. So I don't want to foreshadow exactly what we'll be doing and where, but I think it's more likely that those opportunities will exist in those strong, more developed nation economies where we've already got existing connections and relationships.
AustralianSuper Chief Executive Paul Schroeder there, speaking to Paul Allen there. And we want to check you out and show you and flash out a new feature that's really gone online today. It's called the Bloomberg Video Hub. You can explore live streaming news and interviews, all our Bloomberg TV shows, documentaries, reporter analysis, and more. And it's all in one place, right? So you can watch all the things there. Also, if you want to check out stuff from the China show specifically, you can also do that too. If you just kind of scroll lower, you'll see some of the different shows and what is featured out there as well. So yes, Bloomberg.com/videos. There you go. Right there. Right there.
Right a place.
Click on it.
New feature launching today. So yeah, as Yvonne said, you can go by show, you can go by topic. Lots of breaking news as well that we're going to be having there. So it is your destination. Do check it out. This is Bloomberg.
Let's head back to our coverage of the Malaysia Economic Forum in KL. There, our very own Avril Hong is standing by with our next guest. Avril.
Yeah, Kim Si Lim is CIO, focused on financial institutions and global funds at the China-backed Asian Infrastructure Investment Bank. Kim Si, great to see you.
Thank you for having me on the show, Avril. Good morning to you.
So maybe you can start big picture for us. What are Beijing's focal points when it comes to infrastructure outreach in the region as things stand?
So at AIIB, our mandate is clear, and our mission is to finance infrastructure for tomorrow. And that means working with our member countries, which we now have 111 approved members, to work on their members' sustainable development goals focused on infrastructure.
And talk to us also about when it comes to payments of some of these loans, what is the currency that is typically used?
So we are a US dollar denominated bank, which means we report our results and earnings in US dollars, but we work with our member countries depending on their preferences for currencies. We can offer a variety of currencies in the investments that we provide, which could include euros, yens, RMB, Thai baht, Turkish lira, and so on.
Is there more of a push to use more renminbi?
It depends on what our member countries and the clients require. We do not recommend or we do not suggest one currency over the other. It depends on what their financing needs are.
But this is also coming at a time where China has a goal of internationalization of the yuan. Is that something that is being put into the equation when it comes to infrastructure investments for the region?
I think, given the current landscape, as you said, where there's dislocation in supply chain and there's companies that look at trade differently, naturally, many countries and companies will want to diversify their sources of supply, their sources of financing, and along with that, there could come a demand for a diversification of currencies in which they trade and finance their operations, which I think is quite natural in today's environment.
So what are the infrastructure needs for the region? What are the gaps, and how is AIIB looking to fill that?
So let's focus on ASEAN, for example. There has been a lot of progress in ASEAN in terms of the energy transition. We see renewable energy being added to the mix quite rapidly and with quite a lot of success. Where we see more need or more work that needs to be done is in the cross-border connectivity piece. Because when you look around ASEAN, there are some countries that are more naturally endowed with natural resources. For example, Laos, which has a lot of hydro resources. And there are other countries in the region which are not so well endowed. So connecting ASEAN as an energy system will allow the countries to have lower cost, will allow Laos, for example, to diversify its export revenues by exporting excess renewable power.
Which makes sense announced in terms of the ASEAN power grid and the need for the connectivity, but how do you view this as an investor, given the concerns that a cross-border arrangement comes with, how much compatibility is there when it comes to national systems, for example, or regulatory hurdles?
Absolutely right, Avril. It is a complex and challenging project that requires many levels of stakeholder engagement. For example, to harmonize contracts, because each sovereign will have its own energy system, own energy contracts and tariffs. In order for there to be a truly integrated regional energy system, there needs to be a harmonization across the parties in order for that energy to flow fairly and at a competitive rate. MDBs like us, which count the ASEAN members as our shareholders, have that convening power to bring the parties to the table to discuss and agree on a system that works for all. Our role is to be a neutral partner in this discussion in order to allow for the parties to convene and discuss what would work. And that's the role that AIIB, alongside our MDB partners like the World Bank and ADB, are working with our partners to get
And recently AIIB signed an agreement with some of the Malaysian lenders, right, to provide support for ASEAN. But I wonder, is there, how much you can share with us in terms of how much capital is being deployed to Malaysia specifically?
So AIIB has just recently launched into Malaysia as late as October of last year. And the $6 billion letter of intent that we signed with the 4 leading banks is our first step into coming into investing in Malaysia. We believe that partnership is very strong and is the right one, especially for cross-border and regional connectivity projects. For example, most of the large Malaysian banks that we signed with have a regional footprint, meaning branches and local presence in the ASEAN countries. And we as an MDB have the global view. And the partnership of those two elements will allow us to find bankable projects, make the projects bankable, and therefore make a vision like the ASEAN Power Grid a step closer to reality.
This is all coming at a time where data center demand is straining power grids. I wonder, with these renewable energy projects, what do you see as the role that they can play to perhaps alleviate some of that stress on the systems?
Absolutely. Digitalization of the grid is important because AI technologies can be used to predict demand and supply along the grid. There could also be technological applications that can help balance the load on the grid. But these all require investment and also patient capital for some of these newer technologies to achieve commercial scale. MDBs can provide that patient capital to work with these newer technologies to allow for time for these technologies to develop from concept to execution.
Okay, Kim Si, good to get your insights on this space. Thanks very much for sharing this. Kim Si Lim is Chief Investment Officer, Public Sector Financial Institutions and Funds at AIIB. Belle?
April, great conversation there. And we're going to have more from the Malaysia Economic Forum now, because the economy minister says he's confident of reaching his government's growth target for this year of up to 4.5%. He told us exclusively about Malaysia's bets on AI and the digital economy. That conversation with April also earlier today.
When we look from the performance of 2025, it shows that we remain resilient, competitive at the global segment. But at the same time, definitely moving towards 2026, as what we mentioned in our 13 Malaysia plan, is going to be about digital economy. It's going to be the focus on AI. And definitely, we are looking towards all these higher value or the value creation based economy for us to maneuver all these challenges ahead.
Yeah, so with all these measures underway, that growth projection for this year, I think, is 4 to 4.5%. Correct me if I'm wrong.
Yeah.
Is there any room for revising it upwards then, given how you're seeing the tailwinds evolve for the Malaysian economy?
Because we have to look into more overall overview. Definitely in terms of domestic economy, we believe we have that strength. But at the same time, we cannot rule out these ongoing geopolitical challenges. So that's why I think it's not for me to revise easily the numbers, but definitely showing 4 to 4.5% shows how confident we are to continue to tell to the world that Malaysian economy is still open. We are actually going to be competitive, and definitely in 2026, as the Minister of Economy, I want to see one more time to beat our own prediction on economic growth.
On those geopolitical concerns that you raised, how worried are you that chip tariffs could escalate? And is the Malaysian government ready to provide support in that event for the semiconductor industry?
Like when we first, in terms of how we continually engagement and negotiation with the US, we managed to bring down the reciprocal tariff from 25% to 19%. So in that sense, definitely it's within our interest to provide the most conducive and productive environment for our suppliers. And it also shows our certainty to continually engage with the US, China and whatnot. But definitely, when we talk about semiconductor, Malaysia is number 6 in the world. But our strength more towards the back end, about the packaging, about the testing. But that's why moving ahead, for us to remain competitive, we need to move from the back end to the front end. So that's why I think in terms of the chip design, this is what we are actually trying to uplift towards the value creation economy. Because if not, if we remain complacent with what we have today, things are getting tougher and getting more challenging. So that's why for me, it's not just to talking about what will happen in the next few months, but also moving up the value chain so that we are going to be resilient for the next 2-3 years.
And that was Malaysia's economy minister in Kuala Lumpur. We're tracking when it comes to silver prices here this morning, just to show you how fragile the mood is out there, right? When you have silver, you have crypto, even when the Kospi is falling, just goes to show we are definitely losing some momentum here. This unwind is continuing on. Silver basically is down. These are the spot prices, close to 14% downside here right now for silver here today. So certainly that's one thing to watch. Given that the dollar gains, that certainly is. There's a lot of, risk management around AI that seems to continue to take hold here today. Now, if you are a subscriber and want to watch all the interviews that we've been talking to you about and showing you this morning, just go to TV Go. You can also become part of the conversation by sending us instant messages. Check it out at TV Go. This is Bloomberg.
But we're seeing quite a big pain trade that's really emerging or accelerating in the session this morning, because even gold that actually rose yesterday is giving up and falling back below that 5,000 threshold today. So you're off 3% so far. Of course, you can't mistake what's happening in the silver market as well, because you stack up against silver with the likes of the Bitcoin trade as well, for instance. You're just continuing to see those losses accelerating. So lots of traders are quite jittery, it seems, right now. And you see that movement back into the dollar, essentially. Yeah, silver price is down 13% intraday. We certainly haven't seen that since, last Friday maybe. So, certainly the 2 days of gains that we saw basically have been evaporated now just from the price action that we're seeing right now. That is against, of course, a stronger dollar story. That's going to be one thing to watch. And even like a market like Korea, right, which up until now has been almost like Teflon, that they have also fallen victim to, of course, this tech sell-off. And Kospi, there you go, we're seeing it down about 3%. Kosdaq also down about 3% here. Taiwan is also being dragged down here at HS Tech. Now, if we continue this way, it looks like we might ink finally here that technical of reaching that bear market. Yeah, because I think we just need to recap really what should have been a driver for the Kospi today, and that is Alphabet's numbers and this CapEx number that blew way past estimates. So they're saying that's going to come in at around up to $185 billion this year. That should be benefiting names like SK Hynix, for instance, which is a big supplier to them. But let's take a look at that tech story in more detail because it is very broad-based, a sell-off, and quite exceptional on a day as well, and probably bad timing for Baidu to announce this dividend and share buyback.
I mean, even they're not immune now.
Exactly.
They were positive, now they're back to negative territory.
Turn negative, but again, it just sort of tells you hitting the platform companies, these concerns, chip stocks, or chip link stocks like SMIC. Where has been a big bright spot, though, is the consumer side in China.
Yeah, is this sort of the tactical rotation play, right? When you take a look at Yum China, for example, earnings were pretty good there. They're seeing the stock up some 8% with Jefferies upgrading their price target as well. PopMart also getting a pop this morning. That's it for us here in the China Show. Insight is next.